Hi, I'm Chris Tennent Brown and welcome to our latest investment update. Well, the first 3 months of 2019 have been very good for investments, and many investors have seen a reversal of the declines they endured in late 2018, thanks in part to a strong recovery in share markets both here and offshore. However, we're still grappling with a number of uncertainties. US political uncertainties, global trade, Brexit, European concerns, they're all ongoing issues that have flowed from 2018 into 2019. And any one of them could flare up again to trouble investors. But over the first quarter of the year, the mood in global markets has definitely been way more positive than it was during 2018, and investments have responded positively. Now, saying that, global share markets are still slightly off last year's peak, but they have recovered most of the losses that investors endured in late 2018. New Zealand shares didn't dip as much last year, and our market has set fresh record highs over recent weeks, and that's boosting returns. In sum, the overall share exposure within the funds and portfolios has been good for performance this quarter and over the full 12-month period. One of the key developments over the past year that has been impacting investments so much was actually taking place in interest rate markets around the world. Last year, there were a lot of fears about higher global interest rates and what those rates would mean for bonds, shares, and economic growth. Those fears of higher interest rates have receded over recent months. The US Federal Reserve has changed its outlook, moving from last year's forecasts of significant interest rate increases to a more benign outlook. And here our Reserve Bank has also moved to a more cautious outlook for interest rates. In fact, we now think the Reserve Bank of New Zealand could cut the official cash rate over the coming months. We've also seen mortgage rates and term deposit rates come down in New Zealand over recent weeks. Now, all up, these lower interest rates should be a shot in the arm for businesses and the economy as it goes through a softer patch, but those same low interest rates are a challenge for investors relying on income from their investments. Turning to the outlook, we can't rule out further volatility in financial markets, and that could have an impact on investors. After all, some of the key events which upset markets last year are still ongoing. These bouts of volatility are uncomfortable for all of us when they impact our savings, but it's worth reflecting on how quickly sentiment changes and how quickly markets can recover, as we've seen over the first quarter of this year. We're also keeping an eye on the potential tax changes that are being discussed right now. Don't forget they're just proposals at this stage and far from certain. Now, despite all the uncertainties that we're seeing at the moment, we expect global growth to remain reasonable over the next few years, and the local economy can pick up from the softer patch that we're going through, supported by those lower interest rates and strong export prices. With all these issues in mind, we continue to base our investment decisions on medium to longer term expectations. We believe that this is the approach that will deliver the best investment outcomes in the future. Thanks for watching.